most important thing to call out here is sort of in the bottom 10 readings, you got financials just absolutely getting mercy crush. So again, when we took industrials, and this is a point I really want to make, when we changed that last slide in our macro themes deck, the slide that has our trade, trend, and tail factor exposure selections on the long and short side, we don't do that willy-nilly. It's all part of a really rigid and rigorous process, from the perspective of our factor exposure selection, and we took energy and industrials off, heading into this year. Mm-hmm. We basically said, okay, consensus gets the deflation call. What's the most incremental call we can make from here? Not to say that we were bullish on energy and industrials, because we certainly aren't. It's just rather, what's the best call we can make from today? And that call is, consensus does not understand the growth slowing call in the U.S. And certainly on the margin, in the first couple months of this year, they're either understanding it or being forced to understand it, in market price terms.
Is it safe to say that investors were set up bullish in financials because of the rate? Because of the rate rise, like this assumption that a steeper yield curve is good for financials.
Absolutely. So it's a double whammy. So yes, everyone sort of was caught off sides with the dot plot and their expectations for short-term interest rates, and banks being asset sensitive, being able to flow through that P&L from a NIM perspective and have that flow down the P&L to rising earnings growth. And also the fact that if you're underweight energy and you're underweight industrials and you're underweight materials, by definition you have to be overweight the financials to make to allocate. So investors have been really overweight financials, healthcare, and consumer staples. If you look at sort of hedge fund ownership and mutual fund ownership reports, those are financials were one of the biggest overweights. So obviously that's kind of part of the reason why you're seeing this sort of puke in that sector and in that space in the year to date is because people were overweight that on a faulty premise, and that faulty premise is that U.S. growth is going to continue to accelerate, that there was no rising recession risk, and that everything was fine in the credit cycle. Well, as our Q1 macro themes deck has highlighted in great detail, all three of those premises are just wrong.